Okay, today is Christmas Day. Okay, it's Thursday. It's 6:22 a.m. It is December 25th. Okay, um, it is so now I wanna look into it a little bit more here. I wanna now I wanna really figure this out. Okay, I want to make sure that I understand. Okay, I it may just be that I am at a point where this may be at a point where that I may be at the cusp of really uh, putting my second foot on the other side of really making some money in the market. Okay, I had a taste of it, which meant that my one foot was on the other side with the 5K account. Now, if I get a payout with the 10K, I'll be firmly on the other side, knowing what got me there. Okay, knowing fully what got me there. Okay, so the whole thing about trading is that the whole thing about trading is either it's going to be support or resistance. Okay, it's going to be support or resistance. That's how trading is done. Okay, because price will move from support and resistance any way you shake it, any way you look at it. That's how it works. Any way you slice the bread, or whether you wake up today or tomorrow, the next day, or whatever the situation is, trading is about support and resistance. Even a single candle has support and resistance. Okay, a single candle has the high and a low. Okay, so within that time period, the support and resistance is in that single candle. So the candle will enter and will go up, okay, and then come back down, and then it'll close at the bottom where it's red. Okay, so that means that it had touched down on the support. Now it's exiting the trade at a level, and it entered into the level. It reached the point where it was the high of the day, which is the resistance. Okay, a single candle shows what the support and resistance is. Okay, for me, it helps me to think about this, uh, to think about what I'm about to what I'm about to talk about. Okay, so what I need to do is really elaborate on what I'm looking for. Okay, so I just thought to myself, okay, so there are four pieces to the pillars of trading. Okay, which is which is uh, which is me, which is the mind and the body. The second part is the stop loss. The third part is the entry, and the fourth part is the exit. Okay, the profit taking. Those are the four primary ingredients of of being a profitable trader. Then I thought to myself, when I look at this computer, I'm trying to analyze how I'm trading. Okay, so how am I trading? So how am I trading? How am I trading? Okay, so how am I trading? I'm trading based on I'm looking at the candles and I recognize something. I recognize something such as I see that the price has moved into an area. That's why some people, what they do is they prepare before the market opens. Okay, if they're just trading the New York market, what they do is they'll mark out what major areas are, because people do also trade around support and resistance, and what the structure is, how the structure is building up to the market open. So they look at a couple of things. What is the structure? Okay, defining what the trend is, and second part is where are the possible support and resistance areas. Okay, where are the support and resistance areas? So when the price moves into that area, then what they're looking for is the entry point that's going to help them either move with to help them to move with the trend, whether it's going up or whether it's going down. Okay, So then I thought to myself, okay, so when I see it, what am I looking for? Okay, what I'm looking for is the price is gonna hit an area where I believe that something interesting will happen. Okay, and when I see a particular, so I'm engaged in market and looking at it from a uh, so initially what I'm doing is, okay, is it possible for me to get a trade out of this? Okay, am I getting in there to see what the trade is, right? So when I open up a chart, when the price is moving, okay, when the price is moving, it's moving and moving, and I say, hey, it's in this area. So what is it gonna do? How should I take this trade? Is it gonna go down or is it gonna go up? Okay, from that point forward, if it's below, if it's below the resistance area, then I'm gonna look to see, first of all, is it going to bounce down or is it gonna go through it? If it goes through it, then the place that I marked as support and resistance, also I have to see, there's a lot of intricacies that I need to like really get into, because the the support area, which I presume it is, may or may not be based on the skills of me identifying whether that is the whether that is truly a support or resistance area. Okay, am I defining correctly? Okay, did I write it? Did I define it correctly, or do I need to make some adjustments? So when I look at it, then I'm seeing the price moving into an area where I believe the where I believe the possible entry areas will be, and then based on its reaction, I can time it to see whether I should wait longer to see something more, or have I seen enough for me to enter into the trade, and because what I'm looking for is a breakout, obviously, right? In the area where the support and resistance is, I'm looking for a sign that is breaking up or breaking down. Okay, I'm looking for those two possibilities. And when I look at it and I'm saying, hey, is it trending or is it range bound? Okay, I'm also looking for that as well. When I look at the price, I'm saying, okay, the price is here. First of all, what kind of structure it is it trending or is it range bound? And based on when I look at it, and if it's range bound, I got to look at it from a flip side perspective, because I'm looking for it to bounce off. But if it's in a trending mode and I see this level above a certain point, which may or may not be a range bound situation, then when it breaks out, then I can get in and ride it as a trend, or I can look at it from a perspective of a range bound situation. And if the range bound is not wide enough, then I just need to avoid trading that, right? So the idea then for me, so after I identify what the structure is, okay, I'm looking at the structure. Okay, so when I see this trade, current EU is difficult to trade. UJ is difficult to trade. Okay, UJ is difficult to trade because the support and resistance is just everywhere. It could literally just move. It's up here and up down here, and it can move. It can be devastating when it moves, and so it can be very devastating. Okay, so I have to choose wisely. So the next time the price moves to this area, I'm looking at it. If the price is here, I can mark out my territory. If it's here, I can look to go long. I can look to go short in this area, right here, right here to right there, right here to right there. Okay, so I'm looking at this, and I'm saying to myself, so the identification of a trade, and when I size it small, then I'll have time to react. And then if I see it moving into the right territory, I can actually add size. That'll essentially allow me to like reinforce the good trade. I can reinforce it by scaling in. But if I'm wrong, the size will be small. That's something that I need to. That's the other part of my trading. To make my trading a more effective. Okay, that's the way that I can do it so that it can be more effective. Okay. So, uh, so so describing so so support area. So I need to become I need to become extremely good at defining where the support area is. I have to be extremely good at knowing the support and resistance areas so that I can take the trade relying on the fact that I have made the right decision in pointing out what the support and resistance is. Because when I figure out where the support and resistance is, I can trade off of it. That's the beautiful part about uh, being an expert at defining where the support and resistance is, because everything trades off of it. That's the foundation of trading. Trading off of support and resistance. That's the most critical component of identifying the entry point, because I want to be at a point where it has a solid A plus. It has to have an A plus support area if I'm going long. If I'm going short, I'm looking for resistance. But what I'm looking for is a solid A plus, because everything has to be an A plus. Okay? If any part of it is not an A plus, it cannot sum to an A plus. It's not one of those mortgage tranches that were done in 2008. I'm talking about being able to define the support area. Oh my God. Talking through this is helping me to see what is truly important. So since I like to trade, so that means that if I'm able to look at both sides, I can actually make this even a lot better. And then later on, I can figure out how I can take advantage of like scalping. Okay, scalping. I tried it, but I see these green candles and I just jump in, which is not good, because that's usually when there's a big red candle or a big green candle. That usually is a signature that a flush occurred. Flush usually means that it is about to reverse, and so I need to make sure that I'm trading it. Uh, so I, so that's the pitfalls of trading of trading the big green and red candles. So then, so now I see the importance of what support and resistance is, and it's so important for me to figure out what support and resistance is. So even on the Nasdaq, I mean, it went up to a certain point and it got stuck. It traded around there. That's resistance right there. So it has moved to the resistance. And what is it going to do here? What is it going to do? But it's been sitting there. It latched up, trended up, and moved sideways. Similar story with the Dow. Similar story with the S&P. So essentially, it came from here, moved up like that. So support and resistance is incredibly important. Support and resistance is incredibly important. The identification of the support and resistance, the identification of support and resistance makes all trades so much easier. The identification of support and resistance makes trading easier. Okay? Without the identification of the support and resistance areas, trading becomes very difficult. Okay? Because everything is keying off of it. Everything support and resistance is a very an incredible thing to be aware of, because that also helps me to assign the stop loss. That also helps me to assign, boy, wow, that's amazing. And if my mind is set right, then I know where I can see clearly what the support and resistance is. Okay? Then, this is the Q tip, by the way. I suppose on a subconscious and a psychological meaning is that you better open up your ear, because this is very, very important. I may be saying to the YouTube world, this is very, very important. This is a Q-tip to make sure I don't have any blockage that is hindering me from listening to what I'm saying here. By the way, what I discuss is purely for entertainment purposes. Okay? Um, a whole poultry industry is being closed in Arkansas because of a lawsuit that says that poultry farming is polluting the waterways. Okay? So I am very, very aware, and I've been screwed by the Idaho legal system. Okay? Because people tell lies to convict people. Okay? Shawshank Redemption. Okay? Shawshank Redemption. Anyway, so essentially, so everything, it's okay. So let's figure this out. Okay? So this is support, and the price moves here, and then something happens, and then I see a signature of that indicates to me that is respecting this area, and it's bouncing off, and then it's moving. Okay, it's moving. Okay, it's moving here, which means that I have substantiated two things. That's the support, and there's a breakout. Okay, it may not be, it may not always work, because it could be early, like the H formation. H formation is early because the H formation could possibly cause it to further downside. I've seen that formation before. It's essentially a pullback on a major trend, but it's pulling back right around the support area. As the price hits it, bounces up, and then punches right through. That's what usually the H formation predicts in a lot of the cases. And so I got to be very careful around this area. So I have to see. So that means that I may just essentially miss when something bounces like that, because it could be doing this, or it could be doing that. So I could miss one of those. So the reality is, all my job, everything, if I define this correctly, if I find this correctly, if I find this support area correctly, it makes my job a lot easier for the psychology and my physical being, as well as the entry point, okay, and the stop loss, okay, entry point and the stop loss and profit taking, where the other side of that resistance is. It may be a new one that's created on the way there, or it may reach there. It may go up, pull back, and then go to that. But I am aware of these areas that I'm interested in. A range bound situation allows this to be a lot clearer in the way that it moves. Okay, and so I now realize that if I can identify a support area with a high success rate, it makes my trading a lot easier. Okay, so I need to focus on essentially finding a high quality support area, such that even though I set it, my stop loss may not be optimal, my entry point may not be optimal, and my exit point may not be optimal, but if I have the support area clearly defined, if I focus on defining an area where I say the support is support, that means the price is going to respect it, and it's going to make all the other components a lot easier. When I'm winning, the psychology of my mind even though it may be slightly distorted because I'm always it's possible that I may be winning all the time. But the reality is far better than losing and then getting psychologically twisted for several months. Okay, psychologically twisted, forgot how I'm supposed to trade. Okay, so so the idea then it places it places such an incredible it places such an incredible amount of importance on defining what the support is. It is it is a very very important component of trading. Defining this, defining, defining which is essentially defined by this Q-tip, the horizontal Q-tip. Okay, this Q-tip defines the importance of how trading is. Okay, right? Can anybody disagree with that? How can anybody disagree with that? Okay, I saw another video of this other person who's like using volume profiles. Oh, so apparently there's a lot of volume here. Okay, and then another way up, that's where the resistance is. There's a lot of volume here. Okay, so that means that a lot of people bought. So when the price moves up there, there's going to be a lot of selling going on. It's going to move it down because that's where a lot of volume is. A lot of exchanges were. So it supports it. The previous area was being supported with a lot of volume, is indicating that that is an area of major interest, of something significant will occur in between this area, possibly a major trend reversal, okay, which would cause the price to go back to the support area. So this Q-tip, the horizontal, the horizontal, I mean, this I just realized how important this. I just realized how important a support level is, and the identification and the breakout from it is so important. That's why, like penny stocks will be doing this, and then all of a sudden it'll just go skyrocket and parabolic, right there. So what they're looking for is they've already identified. It's easy because they see it. And then there's all sorts of news that occurs, and then there's a little pop that occurs, and volume kicks in before it just starts launching out because there's a lot of people who are involved, and the news pops out, and then because before the news actually hits, volume hits, a little spike occurs, and then shoots up, right? So that in itself is essentially, this is a Q-tip, by the way. It is a Q-tip. Yeah, support. So that means that it makes my job a lot easier. So if it gets in, so this is a prime example. So what I'm looking for is a support area, and then right below it, to a certain degree, uh, it's going to define what the stop loss is. Okay, and then right above it, it's gonna break out. It's gonna break out. And when the signature of this breakout occurs, then I can enter. Okay, but if I'm wrong, then it's gonna fall back down, and I'm gonna lose that, right? Especially when something hits it with an H. When it hits an H, it means that it tried to go up. So apparently, what happens is a profit is taken. People have written it down, profit taken, and then it'll it'll ensue. It'll continue on its way when that H occurs. Okay, so I gotta watch it, absorb the H, and then look for the response to occur. And then if there's something that occurs and the support is strong, it's gonna pop right back up. And I'm looking for that move. Or if it's here, then I'm gonna look for that move to see where the next leg down is. Okay, okay, that's what I'm looking for. So so now so most of my time is going to be like studying, trying to figure out uh, how to define my support area. Okay, support or resistance area. My time, my time needs to be spent. My time needs to be spent on critically analyzing the the things that are happening around that support area. And when that support area is very very strong, then I can expect to key off of this breakout. and then enter into the trade where the breakout occurs, ride it up to where the next resistance is, right?